So let's go for it. Let's go for Moderna. Let's check it out. Let's see if this is gonna be the stock today that will give the thumb up. So Moderna, it's been in the market for a short time. Nevertheless, this company, it's not young. It's been since it was founded in 2010. The reason why the data that we have is until 2019 is because most likely that's the moment that they created their IPO. So they were private before and then they went public. So they went public in December of 2018. That said, we might have the financial information all the way from the moment they start being regulated by SEC or FINRA. That said, let's just click on 5 years so we see it smaller. We can go to a logarithmic scale as always, and that is a very beautiful productivity line. You usually don't have a productivity line like this on a company of the healthcare industry. Nevertheless, this is only 1 year. So we don't have enough data to say that this is an amazing productivity line. We saw Google, for example, was a very long and very pretty one. The same with which one was the company? I think it was the X, the one from metal, the steel company, the United States steel company, also had a very nice one. So in 1 year, we cannot say, but hey, it's better than nothing. Now, as for the company, let's open the web page and let's close the other ones. There you go. It's in the biotechnology industry. There's going to be a lot of big names, most likely around here. Of course, very big with COVID. Alliances with AstraZeneca, with Merck, with Vertex, Charisma Therapeutics, Metagnogomy. There's obviously a lot of interconnection among these companies. We've seen it before. The healthcare industry actually is one of the favorites that we've seen this week, and most of them work with each other. In the SEC filings, we've seen them a lot, that the names are crossed among them. So that's very, very good. Now, the return on assets is 72%. Wow, that's tremendous. I don't remember we've seen a reasonable company, let's say that way, with 72%. P of 5, very low and very good. $65 billion in market cap, very, very good. And 3,000 employees. I thought it would have more, to be honest, but that's what we got. Now, let's go for their balance sheet. As you know, what we want to see is going to be their assets and their liabilities. If you have any questions about what is an asset or a liability, please ask in the comments. It would be a pleasure to repeat it again. Now, as for their assets, they should have increased by a lot. Yes, they did. So it went from 1.5 billion to 7 billion to 24 billion. Now, whenever someone says that the economy is in a recession, or that everything is gonna go down and the whole world will burn and everyone is gonna lose their money, you ask them if that's what happened in 2020 for that small period of time from March to July, and most likely they're gonna say yes because they lifted. And then you just show this. You just show how the economy is not the economy as itself. The economy is divided by sectors, and some sectors go up, some sectors go down. When there is a booming market, most sectors go up and some of them go down. And whenever there is a recession or any bear market or serious bear market, most of the sectors go down, but some of them go up. So as long as you're not believing that the whole economy is just one big chunk, then you're going to be able to make profit like we did. If you believe that is divided in sectors and then you try to get the opportunities of those sectors, then you're going to be able to generate earnings in the future. So very, very good. I would guess that the liabilities did not increase that much. We have 1.5, 7, and 24. And this is in millions. Then, 4 billion though. 4 billion was quite a lot. That's like 10 times, huh? And 10 billions on on liabilities, which is still half of it. 24 to 10. We have more than twice of the assets for liabilities. That's so much liquidity. As for the debt, let me see where the debt is. The Yeah, long-term debt is just 700 million. It's nothing. It's nothing. It's pretty low. So very very good. I really like to see that. Equity obviously increased a lot. Nothing out of the extraordinary. Just very very good balance sheet for this company. Now the income statement, the revenue, like look at that. Before COVID happened, it was 100 million, 200 million, 100 million, 60 million, then 800 million, then 18 billion. It's just tremendous how that happened. Of course, we have like what was it, like 75% return on assets. Um, anyway, when we see the net income is in negative all of the years except for this one in 12 billion. Now I would guess that the net income was negative here because of all of the research that they had to do. Actually, obviously it was not easy to come up with the with a vaccine in such a short period of time, and all of the different variables that it must have had were obviously extremely expensive. There might be something specific that might show us that. Let me see. This kind of shrinked a little bit, and usually it's not shrinked, so we're gonna check on that. Yeah, research and development. Look, research and development expenses. It was just 500 million until last year, and this year it became over 1 billion. So you have like 1 billion of expenses from 2019 to 2020 that you didn't have. But of course, that billion of research and development, it translated into this massive revenue. And that's what happens with the healthcare industry. They use many of their resources in research and development, and sometimes they just don't fruit any benefit. But some of them do, and those that do are the ones that we try to look for. So very understandable why they are in minus 700 millions. If they would have not increased by 1 billion their research and development, this would be positive. But thanks God they did it, because we got a vaccine, plus they are doing very well this year. So very good on the cash flow, very good on the cash flow statement. As for the net cash provided by operating activities, it's very surprising that it's in positive. I'm not gonna lie. I did not expect this to be in positive. Other working capital. I have no idea what they mean by other working capital as for this industry. This is something that we can actually, I actually want to see the, let's just do that right now. Let me open the, sorry, let me open the filings. And we're going to check that. We're going to check that. We're going to see what is that. So, change in working capital. Let's check that right now. Let's see if we have it. Nope, they didn't have it. It's pretty sad that they don't have it on their like that we can like find it easily. Oh, what happened there? Linux giving me a problem. Let me go again. Change in working capital. Let me see working capital. Okay, so we do have like an explanation here about the working capital in the operating activities. So all of this is it's based on it. So we actually found it, which is what we wanted. We have like a little bit of it, not too much explanation. But if we would read it, we're not gonna do it right now for the sake of time. But we have it there. We could understand a little bit more of what it is, and that's why the SEC filings are so good. If you see something like that, where was it? Like this, that it just increased by 3 billion when all the time is in negative, you would think that it was a special circumstance. So then we can read it, and we have it here. We can do it later if we want. So very very good. That's why it's so massive, and the same in the other years. Well, 13 billion though. Well, this year makes sense because most likely the net income was massive. Yeah, there you go. The net income is huge, but it was not that normal for 2020 to have 2 billion. I hope you understand the process of thought that I went with. If you have any doubt, please let me know. Now, thanks God the investing activities are in negative because we got 2 positive last time. So this makes me happy. Purchase of investments. this could be part of the research and development that they did. This could be actually also with other companies that they were linked together or partnership with. And that's why those investments, expenses investment, were like $3 billion. Sales maturities of investments, that's normal. All right, nothing out of the extraordinary there. Financial activities in positive. I don't know what's going on today that the three companies have financial activities in positive. Like from Monday to Thursday, we had the normal, like a normal company should be. And now they're all in positive. Again, we'll have to see why the hell they're diluting us. This is so sad. That's so sad. I don't like that. It doesn't matter. Nevertheless, because everything is extremely well, and once we account for the free cash flow, it's true that in 2019 they were not being in positive, but we know by healthcare, this is like the fifth company in the healthcare industry that we analyze. We know that 2019 was normal, they were in negative, and most of them 20 and 21 they did tremendously good. So most likely we're gonna have everything except one X. Oh no, we actually have two. Well, both in the cash flow, of course. I just thought in one part. So for those that don't know, this ponderation, remember that is the ponderations that we have in order to know if a company is better or not than the other ones in comparison to the financial statements. So very, very reasonable, not much of an issue. Let's go for their webpage. Investor part is here, like we always like to say, and to see it. This is what you have to see. This is what matters, their events, presentations, SEC filings, and so on. Here, SEC filings are here. That's the important part. Sure. And we already saw part of the SEC filing, but we didn't see the shares. So let's see how it goes. From February 26, 2020, we were at 368 million. And then the next year, sorry about that. The next year we were at 399. So yeah, they diluted us from 370 to 400. That's, yeah, like 8%, something like that. So like an 8%. Well, it's not that bad. It is bad, but not horribly bad. And then for 400, we went to 402. So we got diluted from 370 until 400. It's not that bad. They did need cash flow in order to pay for all of that research and development. So it was understandable. I would guess that the management of this company will repurchase the stocks whenever they believe they are at a reasonable price. At the moment, I don't see anything too special in Moderna actually, in comparison to what we saw in Vista before. I think that at the moment there is nothing that tells me that we should buy it, even though it has a really good balance sheet and very good income statement and a very good cash flow. The fact that most of their income came from these 2 years when they were like one of the pioneers in COVID, it makes it tough to know what would have happened if they would not been one of the leading companies during the COVID vaccines. Therefore, it is a company that at the moment I would still analyze it, definitely. It has a thumb up, a good thumb up to analyze it, but it doesn't make me as happy as Vir did on Tuesday. So very, very good. We're gonna analyze then. If there are any questions, chat? No. The stream is actually being quite long today. We might have time for one or two. I'm not quite sure. Let's see. Let's try for Vista Outdoor. So Vista Outdoor is a consumer cyclical. I think it's also the first consumer cyclical that we see, right? Yep, it is. So they are in which sector? They're in the leisure sector. Well, you guys know how I feel about leisure. Oh, this is I'm sure I'm gonna be disappointed. Remember what we said? We had another entertainment company a few days ago, and the problem is like if people keep feeling that there's going to be a recession coming soon because of the increase of 0.75 of the interest in the United States, or because of the China situation, or because of Ukraine and Russia, or because of the gas in in Europe, or because the euro went down to 0.99 of a US dollar, or because the inflation of the United States. There's so many reasons right now for people to be afraid, and usually leisure and entertainment does not get, they don't take that well. So not in all leisure companies are companies that are not in the best situation. It's just 2016, so it doesn't make much of a difference. Sorry. Let's go for the overview. So leisure, let's open the web page. US, New York Exchange, 22% return on assets, a PE of 3, market cap of 1.6 billion, and 7,000 employees. It has more employees than Moderna, like 100% more. That's interesting. Well, let's see the company though. We have data. Okay. Oh, they already have the 2022 filings. All right, that's pretty nice. So let's go by their assets. Oh no, it's because 2021 is repeated here. Let me just hide this one. There you go. So 2021 and 2022. So in the total assets, it did increase a lot during COVID, which kind of surprised me, and then it stayed stable. That's very, very interesting. But yeah, 2.3 billion. As for the liabilities, we are in 1.3 billion. Yeah, we don't have like the whole 2020. So let's see. It's pretty weird that they will give us 2020. This is most likely a quarterly. So let's check for 2021 and 2019, as we always do with any company. So when we see, sorry about that. There you go. Here we are. Okay, so 2019, 20, and 21, it would be 1.7 billion, 1.3 billion, and 2.3 billion. So yeah, they went down in COVID. That's what we believed was going to happen. And as for the liabilities, they also went down in a very similar proportion. Nevertheless, 1.3 billion and 2.3 billion. It's kind of double though. They're pretty liquid. They're a pretty liquid company. They surprised me for being in the leisure industry. So very, very good there. Very, very good. Now let's keep seeing. I'm gonna hide this column so we don't get distracted. For the revenue, they did 1.7. Wow, that's really, really good. All right, so they actually kept it quite stable from 2015 until 2021, except for COVID. So very, very, very reasonable and very good over there. As for the net income, it was negative for many years, and this year they did a little bit better with 266 million. Nothing too exciting, nothing too exciting there. As for the cash flow in operation activities, it's been in 76 million, 345 million, 318 million. It decreased a little bit. If I invest in activities, they acquire something quite big for 500 million. That's a lot for them. I mean, when we see the numbers and we see 500 millions out of all the investment activities, that's basically the whole thing. So a big acquisition this year. They're investing in something. And financial activities, other financial activities, again, we'll have to see this on the SEC, what exactly it is. But it seems like they're taking that almost as a operating activity. Very, very weird. And, well, the free cash flow has been positive. That's pretty nice. And 275 million, what was their market cap? 1.6 billion. It's a little bit more than 10%. All right. Yeah, it's not bad. It's not bad. Depending on the industry, you also have to see the free cash flow. What's the percentage in comparison to the market cap that they have? Nevertheless, a 10% is usually reasonable, because if they have too much cash in hand, then it also doesn't make sense, right? They're just gonna, unless they want to repurchase, so they have a plan. But if it's also less than 10%, it's quite problematic for the companies, because if something major happens or they want to do something major, they're not going to be able to have the cash for it, and they're going to have to get into debt or sell stocks or so on. So also very reasonable, but nevertheless very unhappy about the net income. So the ponderation gives everything in positive, because they did have a really big revenue. They have historical data. They do fulfill the cash flow requirements that we want. They have almost 2 points in liquidity, and the ROA and the PE is also very good. So actually not bad for being in leisure. I want to read. Let's read together what they're doing. I think my face is gonna be in the middle. of this, but we can just, wow, that's a huge description. But yeah, except for the part that you're gonna miss, we can check real quickly what it is, because maybe it's in production and not in actual entertainment. Yeah, it designs, manufactures, and market consumers outdoors. They operate sporting products and outdoor products. So yeah, it's more into the production than into the actual events. So that explains a lot. Yeah, it's outdoor products. It's more into the production. That explains a lot, because companies that are like pure entertaining, like let's say a cruise, which is just for families to enjoy, they did very, very poorly because people were not investing on it, and they're not going to be investing right now. Whereas if it's production, it depends what the production is, because most likely other companies are the ones that buying it for the retailer at the end. So that makes sense. Okay, so let's go for the we didn't open the financial statements for some reason. I don't know why. 2019, 20, and 21. So we're gonna leave it there. Let's check the web page. Invest with Vista. Wow, that's the first time that we have someone saying just invest right off the bat. Kind of like that. News, quarter, all the things that we like to see are here. Financial statements, very, very good. SEC filings, remember this is our favorite part. They all should have that. So if you want to know more about this company, it's the first one that we see on that sector, right? Consumer cyclicals. If you remember here, consumer cyclicals, this is the first company that we have on this sector. So it's not bad if you want to diversify and you want to know or buy one of these, one company in this sector. This one is possible to check out. Now let's see if they diluted the investors. So May 13, 2019, we had 57 million. For the next year, we have 58 million. So that's nothing. It's like a 2% of stocks that were issued. And then we're back to 57. So, all in all, they had not diluted, nor they had repurchased too many stocks. So we are quite happy with that. It's having affect your position. This company, like, we can say that in comparison to all the other ones that we've seen, it doesn't have too much of an angle. Nevertheless, it is the first one that we see in the consumer cyclical. So I believe that is something really, really good, and something to know. Something that, if you want to diversify, could be an option. Could be an option. So yeah, I'll give it a thumb up because it's in a different sector. It's a sector that we haven't seen. We don't have any point of comparison, and the company is not doing bad. It's just reasonable for what I could see. Maybe when we read the SEC filing, we see that it's the best company ever. But as for what we can see right now, it just seems to be an above average company. So yeah, very, very, very good. I hope that everyone is having an excellent afternoon, if it's an afternoon, or morning, or night if you're already on a Saturday in Asia. And see you on Monday. If you have any questions, please let me know from either from Twitch or any of those other social media, and we will analyze some stocks that you want. So yeah, thank you very much, and hope to see you in the next one.